Good evening, everybody, and welcome to our fireside chat with Hennie Bezuidenhoudt and Emma Swart. I think we're trying a slightly different format tonight, very informal. And please, guys, if you would like to ask a question, post it in the Q&A as opposed to the chat, and we will have one of the panelists answer that question for you. So I think that we are still waiting for attendees. They are still joining. As soon as it stabilizes, then we will kick off. So give us a moment or two. And we seem to be stable. So once again, good evening, welcome. I see that a lot of our audience tonight is actually South African, which is quite nice. We normally have a much more diverse audience, but great that you've made your evening available for us. I hope you've had dinner, and we'll try and get some very interesting facts out of the gate as soon as possible. I'm really pleased that we could get Hennie here. He travels a lot, as you probably know. And what are you talking about? Okay, I guess we've got a recording in progress at last. And so, Hennie, let's jump straight into the big question. I think that when everybody speaks to you or meets you online, they want to know, how on earth did we get into this medical healthcare space? And what is your history and what brought you to medical healthcare? So I think we'd really like to go back a little bit. Take us back to the part of the story that you don't normally tell. The story of the healthcare industry before real estate.
Thank you, Justin, and good evening. Yes, I would like to keep it short. We can talk a lot about it, but I started about 40 years ago my career in the financial services industry. And at that stage, the healthcare funding industry was in serious trouble with overutilization and in desperate need for a new approach, new products, and new ideas. And over a period of 10 years, I developed new generation health insurance products. And through that process, I really developed a deep understanding of the healthcare industry, the delivery models, and the funding models that was applicable 30 years ago. In 1993, I bought my first medical office block, which I still own today, and which is still performing very, very well, although it's about 5 times the size when I bought it 30 years ago. And in 2003, I changed my business, and my primary focus in my business was medical real estate, which I still do today, and where I'm still deeply involved in South Africa and with OrbVest.
Thanks, Hennie. I'm going to throw in a wild card here because really this is a fireside chat and we want to try and trip you up on hard questions. Medical insurance in the US and the environment that you were in back in the day, how do they compare?
Yeah, Justin, that's a very interesting thing. I think a fact that not a lot of people know is that all over the world, except South Africa and the US, healthcare is provided by governments. So it is a service that the Department of Health in these countries provide on a staff model. That's how we term it. It's a staff model. That means the government provides the facilities, they employ people. Except South Africa, the private health and private funding industry and the industry in the US is very similar. It's backed by health insurance, whether we call it medical aid or just insurance, and the delivery models are exactly the same. It's driven by the private sector, and that was the reason why we elected the United States, besides the fact that it's a big country, it's a world leader in many ways, but also very similar to the South African scenario, and that's why we were very keen to get in there, because we understand that market very well.
I think that's a very important point, Hennie. I mean, you did look around the world at various different healthcare models and ultimately realized that the US was so very similar to the South African medical insurance industry. I think the other interesting stat, and perhaps you know it, but a lot of people are actually covered by medical insurance in the US, contrary to public belief.
Yeah, it's a very high number. That's where South Africa differs from the United States. I think in South Africa, we've got about 20% of basically the employed that is covered by medical aid or health insurance, sometimes short-term health insurance. But in the United States, it's a very high percentage. It's 93% plus. So almost everybody is covered, which means on the other side that the provider that provide the services, long as he sort of claim and to provide the service according to the rules of the funds, payment to that practice and that provider is guaranteed.
Hennie, a few years ago, you attended a couple of universities, specifically Singularity University, to expand your understanding or your passion, let me put it that way, that comes from your farming background, and I have to throw that in as well. But your passion with regard to the disruption that's happening in the medical sector. And I certainly find that part of your background very, very interesting. So there is a disruption happening. It's not going to be the same as it always was. And perhaps you could tell us a little bit about the disruption that's happening in the sector.
I think, Justin, we're all acutely aware of the fact that the world is changing. In fact, I've heard it now many times that the leader says that the only thing that we can be certain of is change. And the healthcare industry is definitely not isolated from those changes and the disruption that's happening in the world. So what's driving this disruption? And I think the most important part here is that we've seen the development of sensors and the collection of data, and in our case, the collection of health data, through wearables like watches and contact lenses and various other methods. And with this data and with the development of artificial intelligence, 3D printing and robots, I think we're moving away from the old dispensation where care was reactive. That means we wait until somebody has got a serious healthcare problem and then we try to treat it. With all with the technology and the developments in the healthcare field, we're moving now to a proactive approach. And the thinking at the moment in the fact is what I also picked up at these Singularity exponential medical conferences, that we're moving in a direction of prevention and prediction. That means that we will long in advance be in a position where we can predict what will happen health-wise with the person, and that we can prevent some of the situations to develop long before they become a problem. So that's the major change. The other thing is, given these developments, I think we see, also changes in the delivery models. In the past, and when I started in the industry, it was almost all the medical practices was individual practice of a couple of doctors together, and they provided the service. With all these developments in the world, we see that there are new entrants, new service providers entering the healthcare industry. We must be very, very acutely aware of the impact of these new entrants into the market. And I just want to mention them very briefly. The first one is tech invaders. As we've indicated, that data collection, artificial intelligence is going to play a very important role. And that's the reason why the big players are getting into the market. And if I remember correctly, FAMCA, which is Facebook, Amazon, Microsoft, Google, and Apple, have just in 2020 invested over $4 trillion in 124 startups in this field, where they will be able to collect data, extract information out of the data that will help us to predict healthcare conditions that can develop in a person's life. The other trend that we see in the US is consolidation, to be able to have these data available and to have the technology to participate in the process. consolidation is very important. Then we get the vertical integrators, where the services, you can't provide healthcare service in isolation. It needs to be a holistic approach. It needs to be an integrated approach. And therefore, we see in America vertical integration from the primary care provider right through to the hospitals and the specialized facilities that provide the really serious treatment that's needed sometimes. Then we see also a very interesting other trend, and that's the health retailers. They claim to understand the customer very well. And while you're going for your groceries on a Saturday or afternoon, and the kids got a problem, you can take them, and they believe they can also play a part in terms of especially primary care. And then you get the group that says, I'm independent. I want to stay independent. I don't want to become an employee of these bigger organizations. And that's a group that believe in themselves. They think they know they're the best, and they want to stay independent. And that's the major 5 trends that we see develop in terms of service delivery in the market.
Hennie, just to jump in, there's been a massive acquisition by Amazon most recently. Where would that fit in to this model?
Yeah, I think that is too. That fits into the tech invaders and the consolidators. So they are a tech company with the ability to collect data and manipulate and process that data, but they also at the same time consolidating some of the smaller practices into bigger. So that is the consolidator. That's a consolidation, and with the support of enormous tech processing ability.
Emma, bringing you in here, I think you were researching that quite a lot the other day. Maybe you can give us a bit of insight into that transaction, because it was very significant.
Yeah, and then I think also prior to that, and what Hennie had alluded to, 10 years ago the medical office building space didn't exist, and now if you look at the volume of transactions, it shows how these medical office buildings have moved to the top of the pile in terms of demand. If we look at some of the Revista reports in the first quarter of 2022, there were almost 20,000 listed MOBs with average occupancy rates of 91.7%. And year to date, there's over $20 billion worth of transactions or sales that have taken place within this medical office building space, which, on preceding years has been 10 billion and 13 billion. So there has been a massive shift to the demand for these medical office buildings, specifically, and obviously into this medical space. Touching on Amazon, that you said, investing $3.9 billion, buying an operator of primary care clinics. And they've kind of said that their expansion into healthcare is a top priority. So that again just supports everything Hennie has been saying.
Great, Emma, thanks. And excuse my rudeness for many of you who wouldn't have met Emma in the past. One of her many roles, apart from looking after some of our executive high net worth investors, is of course helping Hennie and the investment committee with research on certain topics that they want an independent view. So thanks for that, Emma, and that detail. But I think that I've left the slides on here. I'm really trying not to make this a slide presentation, because Hennie, this talks to the trend, which is absolutely fascinating, that patients are moving out of the hospital system.
Yeah, this is a very important and very interesting development that we see now since about 2010. And it's, if you think about it, it's a very logical development. We all over the world see that specialization is very important in the world that we live in. If you do a certain operation or you build a certain product and you do only that product, then you become highly specialized and highly cost effective. So in the past, we had these very big general hospitals that provide an enormous range of services to the public. And what we find, and this was also emphasized by the COVID pandemic with, the threat of infections, that people moved and preferred to move to smaller, highly specialized facilities. And what you see in the graph is the drop in admissions to inpatient facilities. That means general hospitals or bigger hospitals, to outpatient facilities, which we know in South Africa as day hospitals or ambulatory surgery centers, and people prefer to go that. And there you can see how the one has overtaken the other. And in this graph, you can see these physician groups are normally, they operate out of the surgery centers, and you can see of the operations in that particular case, almost half is done by physician groups, and the hospital impact in terms of those type of operations are decreasing. So a very important thing where people specialized. And here you can see in terms of hip replacements. In the past, the idea was, and the thinking was, that day hospitals are only there for smaller and minor operations. We've moved into the space of hip replacement, knee replacements, and there you can see in the United States, what percentage of money is spent in inpatient facilities and outpatient facilities. By far, the majority is spent in outpatient facilities, because technology has developed to such an extent that what was a major operation in the past is now a very small surgery, and you can leave the hospital after a couple of hours. And we follow these trends on a monthly basis, and we prefer to invest in the areas and in the buildings and facilities where we see that demand is growing and the patients prefer to go to.
Yeah, and another thing, as Hennie said, that we looked at this closely as well, because we thought obviously there may have been a shift, although it was trending downwards prior to COVID. We thought maybe after COVID things may normalize. However, we've noticed that the shift is not solely due to COVID. When the elective procedures are now able to be done again in the hospitals, and in fact, the number of the monthly medical claims from the off-campus, meaning outside of hospital, from the medical aids in 2021 has increased by 47% compared to the prior year. So it shows that although many of those hospitals have resumed these elective procedures, the out-of-hospital route for procedures has continued to be preferable, and has also demonstrated that readmission and post-surgical complication rates are drastically lower when done out of hospitals than in the hospitals.
Thanks, Emma. And Hennie, moving back to you, I think one of our big questions that we always have to answer is, what happens if a particular government wants to make specific changes to the health dispensation? There is criticism, specifically by the Democrats, I guess, that the healthcare needs to be centralized and the healthcare expenditure needs to be controlled. What was the effect of Obamacare? Did it impact the healthcare sort of spend at all? And what can you say about the influence of specific governments on healthcare spend, and perhaps the threat to the existing sort of very private healthcare system in the US?
Yeah, Justin, I think healthcare is a very emotional thing. If your child is not well, you will find a way to get treatment. So, and it's a very unpopular thing that can bring governments to a fall if they change the healthcare dispensation where people don't have access to proper healthcare and to surgery and whatever other treatment they may need. So here you can see what is the, if we compare the GDP of the United States over the period of almost 60 years to the escalation in healthcare expenses. And you can see that the healthcare expenses is growing much faster than the GDP of the United States in this case. So it is a concern. We will have to contain costs. And that's the reason why we also look at, consolidation and all the other trends to deliver a more efficient healthcare system. But governments have tried in South Africa over my 30 years experience to reduce or shrink the benefits that that the public has. In the US, we've seen Obamacare, where there was an investigation over many years to try to improve the healthcare system. They didn't change it in any substantial way. And the outcome of that whole investigation, that 38 million people was also allowed to join the insurance system through various packages and products that was available in the market. So my view is that healthcare is very, very resilient. It will be very difficult for governments to pass legislation where they will that will impact, healthcare and delivery of proper healthcare services to the public.
Thank you, Hennie. Let's talk a little bit, perhaps I can bring you in here, commercial real estate and the impact of the current global, and I'm going to call it a financial crisis because it is almost getting there. I think that there have been some very scary developments, certainly from our point of view. Interest rates cranking up at the rate that they are, and secondly, this very strange phenomenon that prices are actually increasing of certain niches of medical real estate. I'm going to put this one up and perhaps bring you in here.
Yes, so I think the strange phenomenon with this is specifically around this medical office building space. We have seen the demand for these buildings go up. We have seen the prices go up for these buildings. The cap rates are coming down. If you look back a couple of years, we were easy being able to find buildings 7.5%, 7% cap rate. I think the most expensive medical office building went, at 3.5% cap rate. So these buildings are becoming more expensive. And it has taken time, obviously, with OrbVest in the market to be able to try and get these buildings off market, where we get them firsthand as opposed to trying to compete, with brokers and on the market.
Yeah. Now let's perhaps bring Hennie in again here. Hennie, a lot of money moving out of the markets. Why?
Yes, pardon, just can you repeat that for me, Jack?
Sorry, I think I broke up a bit. There's a lot of money moving out of the equity markets at the moment and finding safe haven in commercial real estate generally. And I think this graph kind of shows what is expected in 2022. In the region of $650 billion moving into the commercial real estate space of new capital invested. What reason do you think that that's happening?
Yeah, it's a very interesting thing that I think, COVID has really impacted, some of the other asset classes. I think retail, hospitality in particular, and commercial was badly affected by the COVID pandemic and hasn't recovered fully now. And I don't think it will fully recover because the new standards has developed of how people meet and work. So that's one reason why we see the enormous demand and the all-time high demand for medical real estate is due to its resilience and due to the fact that it's an essential service which people need. So that is one thing that we see, that people definitely move into healthcare to a much larger extent than previously. The other reason for this development, I believe, is the pent-up demand. Construction came to a standstill or was slowed down drastically over the last 2 years. So we've lost about production of 2 years in terms of new facilities. That also led to this. The other implication of that is that these assets becoming very expensive. And due to the importance of healthcare, we've seen that the market, some of the private equity funds are starting also to invest in these healthcare assets. And they are also driving the consolidation process. So an opportunity that we're seeing in the market is to get into niche markets. And because these private equity funds are interested in the business side of these practices, but they're not always really interested in the real estate side because it's smaller buildings. So that's one of the areas that we would like to investigate, the niche markets, because there we can still find enormous value for our investors. In this particular graph, you can see how the volume of transactions has increased since 2021 and how the cap rates has come down. And that is the reason why, as Emma alluded to, we must now look at off-market transactions where the competition is less, and we're looking at niche opportunities where we can still find value for our investors.
Yeah, I'll quote your investment committee statement, Hennie. Now is not the time to be buying buildings, stop buying. And I think that dreadful crocodile jaw that you see on this graph here towards the right kind of really intimates what's going on there. Crazy high prices for these buildings, and at the same time increased interest rates, and still the money just pours in there, you know, soaking up anything that's available on the market. And I think that there's another thing that I want to bring up, and that is the tax dispensation where you can roll your capital gain. Perhaps you just want to allude to that, because that's also really impacting us.
Yeah, I think, you know, with the general trend that real estate in America is expensive at this stage, we definitely in a seller's market where people can get really good value for their assets with these low cap rates. But one of the implications of that development is in the United States, they've got an Article 1031, which means that that if you sell a building and you make a capital gain, but you reinvest, I think it's within 6 months, into another asset, then you don't pay capital gain. So the seller's market, what we're in, has resulted in a number of, quite a large number of investors selling their assets, capitalizing their profits, and then had to reinvest immediately not to pay capital gains tax. And I think that's also a contributing factor to this widening gap with, you know, prices increasing and volume, prices increasing and volumes increasing.
Thank you, Hennie. I think it's been really good having you online. I just want to make sure we push ahead. We don't want to keep you guys too long, but it's been really fantastic having you online. Please, guys, if you have any questions you want to ask Hennie, pop them in the Q&A, and we will answer them there. You can see the Q&A button at the bottom of your screen. I think it's probably worthwhile talking a little bit, Em, about buildings that we have on the market at the moment. But before we get into that, I'm going to ask you, what are you doing in the UK, and what is the initiative that we're looking to launch in Ireland that you are busy seeing institutional investors about?
Yeah, so I think, you know, if we take a step back in terms of, you know, where OrbVest was to where it is now, you know, where we were looking at acquiring, you know, single buildings. It was with 1 or 2 high net worth individuals, one specific building. You know, generally the investor may have been and looked at the building, assessed the risks on that building and the risks associated to it, you know, the tenants, etc. And we continue to acquire these single buildings. You know, as you know, we're now onto Medical 40 investment opportunity. But the investments have opened up to a larger investor base with lower minimum investment amounts. And we've recognized the need to smooth possible periods of disruption and rental flows. As an investor in a single building will feel the effects of, you know, possible disruptions more with a single investment than if investments were spread across a variety of our buildings. You know, and to this course, you know, it was important to provide some form of diversification, which in the current format is with investors either investing through a spread of our buildings, single buildings, alternatively investing, which we'll touch on, shortly, around an OrbVest diversified holding, which gives us a spread of many of our buildings. But where we got to this was that we have institutional money, pension funds, living annuities, etc., where this is exactly the type of asset class, resilient, strong fundamentals in this medical space. But again, they want us to be, we're looking at listing this fund, and with European money, etc., they like it to be domiciled in Ireland. They like the Irish domicilian. So, we are looking currently and speaking to many people, across the board with regards to this fund.
Thanks, Em. Yeah, I think just for everybody's interest, yeah, it's an Irish fund really is for the large institutional investors. And the idea is, how does it benefit others, is that we will be able to go after bigger buildings, larger check sizes, and ultimately, that gives more opportunity to our retail investors that come via the Seychelles, as you probably know. But yeah, tell us a little bit about, first of all, of course, our compliance guys are online, no doubt. And so we have to, of course, share the ugly one. Please understand that these are purely workshops for the benefit of sharing. I know that people do like listening to Hennie. So just understand that any information that we give from here on down is for informational purposes. Please do not make any decision with regard to buying or selling your securities based on what Emma shares with you today. Get independent financial, legal, tax advice before making any call. And then finally, past performance does not guarantee future performance. And of course, OrbVest is a financial services provider in South Africa, OrbVest SA. Less about Hennie and more about OrbVest SA. We have a single building at the moment that we actually really like. Should I show it?
Yes, put up a picture and then I'll talk a little bit around it. Thank you, Just. Right, so this is known as Medical 40. It's a beautiful 50,000 square foot building in the northern part of Albuquerque, New Mexico. Why we like Albuquerque? It's the largest city in New Mexico, where the population has continued to increase over the last decade. And this is due to a couple of reasons, being that the quality of life is centered around a lower cost of living. It has a business-friendly environment with good tax incentives and economic trade zones, which has encouraged business expansion. In the last 2 years alone, $2.2 billion has been spent on new projects across varying industries in Albuquerque. The building itself is located within Albuquerque's most desired office and industrial corridor, with a central location providing ease of access across the MSA. And this centralized location is a significant reason why the tenants want to be in this building. This building is currently 85% tenanted to 3 tenants. So from day one, this gives us a secure cash flow from these investment grade tenants. If we look at the risks of this building, this would be mainly around the renewal of the tenants' leases. However, if we look at the existing tenants, we can get comfort in them staying on at the building for the reasons discussed above, but also for the following reasons. So Quest Diagnostics, who are our anchor tenants, they have been in this space, and it is their centralized lab and testing facility for all of Albuquerque and central Mexico since 1999. So they've been in this building for 23 years. Sonobello, they are one of the nation's largest cosmetic surgery providers, and they are budgeting on spending over $1 million on tenant installation and work on their space in the building. WAFD Insurance, a subsidiary of NASDAQ, WAFD, and their lease expires in 2027. They are currently paying a below market rated rental, and we can't see them looking at leaving. So we are very confident around these existing tenants. Further to this building offers great upside with the vacant space. And we will be immediately pursuing the upside of this building through leasing up the vacant space. So because of the strong fundamentals of this building, we are very confident that we can add value to this building, and to this investment by keeping existing tenants and leasing up that vacancy. Anything that you feel I have missed on that, Justin? Yeah, we really do like this building, you know, for all of the above reasons.
Okay, no, great. I think that what was most fascinating is that, you know, this is a town that we don't know a lot about, especially us South Africans, Albuquerque. But I think we found that there was such a fast growth over the last few years because of these three big expansions of Intel, Netflix, and Facebook.
Yeah.
Yeah, you know, so you know, I think the medical vacancy of medical office buildings in the town is like 2.5%, which we find you know, very, very attractive, and certainly would make it, you know, easy to fill any vacant space and the vacant space that we have. So I think very attractive. I'm gonna ask you obviously a, you know, harder question, and that is, you know, for the average investor, single buildings are not a straight line.
Yes.
Finish the sentence.
End of sentence. So that means so much by that. So, you know, obviously when underpinning any building that you're going to invest in, what underpins your cash on cash are your rental returns. You know, in terms of how we project our cash on cash to our investors, you know, we generally on most of our buildings say, you know, it's around 7% cash on cash, obviously underpinned by the rental flows of that building. When you have a look at this brochure, you know, which we can send out and is on our website, you know, we'll see that we will always be on the conservative side when we are projecting to our investors. You know, we'd never want to say we're going to give you 9% and give you 5%. You know, we'd rather say give you 5% and, you know, and actually give you 7%. So, you know, in terms of providing for buffers on this, and the fact that you know, the Quest Diagnostic lease does fall due very soon within our hold of the 5 years. You know, we have made a buffer and said within our first year, we only project, I think it was a 5.5% cash on cash. And then once we have absolute certainty and have renewed those leases, then the cash on cash will kick up again. But you're still, when you're looking across the board, averaging just over a 7% cash on cash return per annum on this investment.
So if you have your grandmother's friend, what would you recommend to her in terms of investment? Bear in mind, she probably is not chasing the top IRR.
Yes. So, you know, as I think I alluded to previously, you know, myself personally, I'll look at OrbVest, and I know I'm going to invest in you know, a couple, if not all of our buildings, and I'll put a small amount into each of our buildings, creating a diversified spread of risk. When you are sitting, and again, you know, sitting in South Africa or in England, wherever you are, you know, you don't know the states, you don't know the buildings, you know, you've got your $5,000, where should you put this? We've then created this OrbVest diversified holdings, you know, investment opportunity, which is what you are seeing on the screen now. You know, and what that is that we said specifically for offering this diversified spread of all of our buildings, the OrbVest diversified holdings is going to take roughly 34 of our buildings, put a portion of all of them together. You are now relying on 34 buildings across a variety of states, underpinned by income streams, rentals from over 100 tenants, so that if one tenant didn't pay or something happened to a building, you know, blew over in a tornado, the effect on the cash on cash, the cash flows to the investor are largely protected by the fact that you have got a large number of buildings and tenants. So this ODH is an extremely solid investment in the medical niche, underpinned by buildings that have the strong fundamentals that Hennie was speaking to earlier. So this was a really solid investment.
Okay, so this is what you'd put your gran into, eh?
Yes, correct. I would. And my mother and my aunt.
Okay, thanks. Are they in it already? That's all I want to know. All right, fantastic. Thank you so much, Em and Hennie. I'm going to give it another moment for some Q&A. We like to keep these webinars to 45 minutes, guys. So really appreciate you coming on and giving up your evening. And I certainly would like any feedback. If you'd like to get more educational stuff going, if you'd like to know anything about a particular topic, we've got the people that can do the research for you and come deliver it on a webinar. Certainly, we do spend a lot of time looking at data and information, especially with these two people below me on the screen here. So it is, it's great to be able to deliver, the information that we do come across. So if this is worthwhile, let us know, and we'll certainly do more of them. No questions at this stage, so I would like to thank you once again. Hennie, Emma, thanks for making it a great webinar tonight. For the rest of you, good night and good evening.